Tuesday, May 6th. Market analysis, Stan Ehrlich. Good morning. 9:46 California time, middle of the trading day. California, 6:30 to 1 o'clock, the traditional stock market trading hours. But of course, futures trade in many, many cases 23 hours a day or a lot more than just 6.5 hours. Nevertheless, we've got the stock market indexes that I start with. And then I go to futures. I'm currently tracking 4 different stocks. That rotates depending upon whatever. The stock market indexes have rallied since some significant buy signals on April 7th and April 9th, mostly April 9th. The rally has been pretty decent, nothing particularly special. But we did get up to, in general, resistance areas where you would expect the market to start to turn back down, which it seems to have started to do yesterday, and there is some downside follow-through today. Momentarily, we're in the middle of the range, but starting to ease back down again, and we've made new lows the last couple of hours or so. I think we're on the way down. Again, there's some better resistance areas on some other indexes, and we'll go over bought in the QQQ and the NASDAQ NQ. So we didn't get overbought. We came very, very close on the rally high on Friday. So now we have to deal with the support areas that are slightly lower than today's lows, which are approximately equal to last week's Wednesday, that is Thursday and Friday. So let's see if we can break below that, making lower lows than today so far. And they'll be touching support area very quickly after that. But this is the beginning, in my opinion, of the next leg down, which at a very bare minimum for the E-mini, a rare gap over a weekend, we need to get to 53.40 approximately. Then we have 2 other major lows and a couple support areas on the way down to the lowest low for this trend and the lowest low for, I guess it's over a year. More than that, since November of 23. So about a year and a half. And that's a low just early last month. And I do think that we're going to challenge that and make new lows. It's quite, I'll use the word bearish, but I'm not looking at a bear market. I don't think this is a bear market. I think it's a large technical correction in a longer-term bull market. So that's where I stand in general. Look at the 1-minute chart. We're starting to slip down. Since 7:30, a little over 2 hours ago, minor new lows. The spider came down and almost closed a little gap from last week. So I have to guesstimate that 70-80% of the gap is closed. Probably not good enough, but mostly closed at this point. And I'm looking for it to turn down again, make new lows, not necessarily today, but it could be today, and start to slip and see how we handle these other support areas on the way down. Now, there's also another gap on the SPY down around 529. I'm looking for that to get closed also. We did not get overbought. We came super close like the ES. Next, spider. 1-minute chart. And it's very close to making those minor new lows. QQQ closed some of the gap from a few days ago. Remember, gaps are almost always closed, but not always. If they're going to try to close the gap, it would look a lot like today's break and not necessarily completely close the gap. And that's exactly what happened so far. But I don't see any reason to say that's it, we're going straight up. Instead, I see a lot more reasons to talk about more of a breaking through support levels and seeing how far this thing can go to the downside. So I am looking for a move down to 448 to close a gap on the QQQ. The NASDAQ futures, almost minor new lows since, 720-ish this morning. The NASDAQ daily data chart challenged and just dropped a tiny bit below last Thursday and Friday's lows. It got overbought. It got up to resistance and turned around so far. We're not down a lot. We were down a fairly significant amount earlier, so we bounced back. But much like yesterday, I think we're going to start to slip back down again, somewhat today. I'm not expecting too much more strength. Opening downside gaps have already been closed on a rally going back up to yesterday's low, and then they started to slip right back down again. NASDAQ, 5-minute chart, 1-minute chart, new lows since about 7:20 this morning. YM, no gaps to close, dropped a little yesterday, and we're currently trading below yesterday's lows, and we attacked but didn't make it below last Thursday and Friday. That's the first minor, very minor support. Then we've got the bottom, we've got 40,500, and then other levels below that. You can see them on your screen, write them down if you want, take a picture of it if you want. YM, 1-minute chart, dropped off very sharply, and now is well below all of the previous lows since around 7:20 this morning. And looks like it could attack the lowest lows first. Remember, the YM has rallied the poorest, slowest, not as strong, not as quick on the upside. So it kind of makes some sense that it's nosediving a little quicker, faster on the downside. Generally speaking, a bit weaker on the average, up or down. Next, we're looking at the Russell. Came up to some resistance, basically stopped at the high end of the resistance, started to slip yesterday, and now we're below that modest resistance level. Nothing particularly super important about it, but it's there and it stopped the rally. So there's a small gap to close down around 1,900. Yeah, 1,900. So I expect that to be closed. Notice that most of the indexes have some sort of gap down a ways, not too far, to close. So a bunch of little magnets on the downside here to pull prices down and close those gaps. And look at the way this is dropping fairly quickly here since about 7:20 this morning. So this, I think, is going to continue on the average, maybe through some significant number of this week. We already got down yesterday and so far down today. Wouldn't surprise me too much if we were down, say, 4 out of 5 or 5 out of 5 days this week. Next, we're looking at the bonds. Bonds continue to slip. The lows that we saw way back on October 23 of 2023 and the lows that we saw on January 14th, both the bottom day had bullish engulfing ER buy signals. I think those signals are creating a very broad year and a half or so double bottom. It looks better. It's more accurate in the notes. You'll see in a moment. I do like the outside down day at the beginning of April. That was a great sell signal so far. And I am expecting bonds to dribble off, not too fast, not too sharply, not too dramatically. 113, maybe a hair lower, and it could very easily bottom out a little bit higher than that, 13.5. But I'm not looking for any major, huge decline here. I do think this dip is going to stop relatively soon in time and price and start to move its way back up. I'll try to keep you keyed into when I'm expecting that start to have begun or anticipating. Now, notes, not overbought or oversold, and RSI doesn't give me any help. We're trying to hold a little support right here, and it's doing an okay, an okay job, but I think it's going to get broken. I don't see us. RSI is 42. It's not anywhere near my 25 oversold, so I'm looking for a test down to 110 and a half, possibly a bit lower, but I don't want to go down too much too fast. I don't expect that. I'm still looking at a very broad double bottom, same date supply, January 13th, 14th of this year, as well as the green bullish engulfing on the exact low day, October 23 of 23. The crude oil. I apologize for yesterday's mistake. I didn't catch the fact that the big down gap yesterday was bad data. I just was looking at the way the market that I thought had moved and didn't remember the previous price action the previous week. So we do not have some big, huge down gap yesterday in energies in general. So I'm filling in the price action and now looking at the correct information. We did get oversold. I said that, but we don't have that big gap. So turning back up again after oversold conditions is no surprise. I think there's a good chance you could bounce back at least to 61.50, and I certainly can't rule out 64.60. I don't think we're going to make lower lows below 55.32. Let's take a look at heating oil. Got oversold, came extremely close to testing a support area, very, very close. Has a good history of being a support area. So I'm looking for a rally at this point up to 211-ish. Next, natural gas. Popped back up some, didn't get to resistance, didn't get overbought. Can't really tell much about natural gas at the moment, so I'm going to just wait for some more developments. If you don't know what to say, don't say anything. Gold. Rushing back up again. There's no indication here that this has turned into a bear market. We did get overbought, well, just like bull markets do get. They get overbought periodically, typically in new high ground. It's exactly what it's been doing, even with sell signals. Now, this sell signal did not work over here on February 14th. This sell signal did work very nicely, not a huge profit, and bottomed out a few days later below the low of the reversal day. So no matter where you sold it in the reversal day, if you stayed short, you had an opportunity to make some money. But that's your own technique. I think there's a chance we could make new highs again in gold. Yeah. If I'm right about the stock market and some of these other markets, then people will be flocking to gold for safety's sake, which is not necessarily true. Silver. I suppose the same kind of commentary, but here we've got a resistance level to deal with, and silver has not made new highs for a long time. It did, so far, double top out, but the downside breakout of the double top didn't hold, and we came all the way back. So what do you got now? Big sideways trading range, basically. Huge support, 29, 28, 27.50. Big resistance, 36-ish. So at the moment, I suppose 34 could be tested, if not broken, on this rally. I see it coming up some more. Next, platinum. Same kind of commentary here. minor support held on the dips. It's about to make a minor new high for about a month and 5 weeks or so. And if we can rally back up above 1,000 or 1,001, then I think we can carry up at least to 1,035 and maybe even 1,060. High-grade copper bottomed out in the support area, got very close to oversold, not quite, and looks like it's going to pop back up to 4.9 again. Yeah, 4.9 and a half maybe. That looks very likely, in my opinion. Grain markets. Soybeans are threatening to have a minor 3 or 4 week downside breakout and drop off a little bit more. Now, I'm beginning to notice that if you did drop down to, I don't know, the support area, 1,001, 1,010, something like that, then let me get the timing on this. Okay, that's good enough. Give or take a day or two is no big deal. So 1, 2, 3, 4, about, May 12th, give or take a day or 2 or 3 even. If we have a low a bit lower than where we are, I don't know, 10, 20, 10, 10, maybe even 10 flat at the lowest, you could build a last shoulder low on a head and shoulder bottom that has this for a neckline at the moment. Let's go with that. I know I'm chopping this off a little bit, but I think this is a little bit more important. Doesn't change things too much. So that would be an upward slanted neckline on a maybe, and I'm way too early here by several days, timing-wise and price-wise. So I'm just going to watch this very closely. I'd love that because I think there's a very broad, since August of last year, head and shoulder bottom building. I've talked about this for days and days and days, weeks and weeks. So let's see if we can build a little bottom here. Patterns inside of patterns are not that rare. This one could develop. Next, we've got soybean oil. Minor dip down here. Not damaging anything really. Could come down a bit more. Actually, 46, 44 is not out of the question. I just don't see that being particularly likely. So, not oversold or overbought. I'd like to see it get oversold and give me a bullish engulfing green buy signal like we did right here, March 20th, like we had here at the bottom of the market, December 23, the last show, one of 2 different shoulders, and in both shoulders, I've got bullish engulfings. Yay! So the head of the formation is around August 16th, and then your 2 previous shoulder lows. This is a double shoulder, head and shoulder bottom in soybean oil. Long-term big pattern, taking over a year now. If it works correctly, you know where the neckline is, and the upside objective is very bullish. Neckline we tested, slightly upward slanted means it's gone up maybe an integer, 50 to 51, something like that. Upside objective would be 62.72, and I'm thinking maybe the end of summer, fall. Soybean meal just can't make it. We are making another new low. Not quite the lowest low for the whole damn trend, but a new low for a couple of weeks here, and a new low actually since April 7th, about a month ago. So, unless this has some kind of dramatic turnaround, there's nothing, as I've been saying lately, bullish at this chart that just got the lower highs and lower lows, and it just keeps chewing its way into new low ground. We're not oversold. We could very well make new lows in soybean meal for a long, long time period. And corn is now starting to fall apart a little bit. Got down quite significantly yesterday and got into oversold conditions. So are we going to end up with a little triple bottom here? You've got to watch for that possibility. But triple bottoms are very rare, so the odds are not particularly good. So I'm looking for some kind of a bullish reversal around where we are or a little squeak lower. I don't mind if we go a little bit below 450, but not by very much. Very small amount. Maybe a nickel dime. And then turn. So it's got to turn up very soon here. We are oversold, so it could happen at any time. Then I'm going to be turning bullish substantially immediately. Now, wheat, like meal, just can't seem to get its rear end in gear here. We've got lower lows, lower highs over extended period of time ever since the war began. So I don't see it. We got a bullish engulfing in wheat a few days ago. It has not been canceled out. I've got to have a big reversal. It is nice to see the low today not violating the longer-term rule of making a lower low than the reversal day, and now currently slightly higher on the day, but really got to start closing above 548.5, and in fact, really get the ball rolling here longer term above 571. Next, cattle overbought. Looks like it's losing a little upside momentum. Wouldn't be surprised to see it dip down at least to about where it came down to before. That bearish engulfing just didn't work. 2 days later, we made the higher high, and I'm sure that my strategies would have dropped the overhead offsetting buy stop, which is a trailing stop, so that we more likely than not didn't get out when we made a higher high than the signal day. We got out somewhat lower, not a lot, but it probably was a small losing trade. We could have a bearish engulfing today, maybe, if it would just drop down sharply and get below yesterday's low, but doesn't look particularly likely at the moment. I'm watching for a top, looking for a bearish turn here. Biggest downside objective would probably be this trend line. Yeah, down below 180, 198. Hogs, minor new low here for the dip. Good sell signal only a week or so ago. This is the new low since. Looks like we're going to close in new low closing ground, but we are at the bottom of a support area and it's holding right there. So there's a chance it could see a small bounce. There's a gap down today. So there is a very small gap. I'll put the marker in for you. Let's see, right about there, and that's about good enough. So, rally to close the gap. Hopefully not going to get above approximately 100. And since we're starting to break support, you've got a little crack in it already. We got new lows. I'm looking for lower lows. Rally or no rally. What do we got for Shell, one of the 4 stocks? We got a rally. It closed the gap yesterday. I talked to you about that. And, well, that wasn't the gap yesterday. Well, yeah, there was a gap down yesterday. But yesterday, it also tried to rally up to close the gap a couple of days earlier. Now they're all closed. It went down to close an up gap, and then it went up today to close the down gap, if you could follow that. But everything is closed. No gaps anymore. Except you do have one down here at 63.43-ish because it gapped up a couple of weeks ago, 3 weeks ago or so. So if I'm right about the indexes, it could pull us down to close that gap. What about Apple? Minor low in support, not the greatest support. Gap to close at lower levels, also a gap to close at higher levels. So you're getting tugged both ways here. I'm not sure which one's going to get filled first. I'd vote for the downside because, as you know, I'm looking for a little bit more break in the indexes. And what about Tesla? Dipping off a little today, 73 cents momentarily. There's a gap to close at lower levels also there at about 241.5-ish. We'll call it 244. something like that. I think that's going to get closed fairly quickly. Wouldn't be surprised. Excuse me. And Carvana, overbought, stalling out, losing upside momentum in a time period when, if it did turn down and stay down and keep trending down, I'm going to call this a shoulder high in the making. I think that's what we've got. I just don't have a sell signal yet. I'd love to get a bearish engulfing ER red sell signal, but we're not getting the outside down day yet. We are overbought. We got one on the exact high of the market, sell signal. We had a shoulder on the left side, which by itself was a small head and shoulder top, which worked. So I'm looking for the last shoulder about now and about these price levels. E-mini, check it out again. A little bounce back to the highs of the last few hours. I think it's going to turn around and make a lower low here, a little bit below 56.28 soon, and maybe a new low for the whole day. You guys have a great day and profitable trading to you.